So you've spoken at length about your margin aspiration, right? Getting to where other listed retailers are, mid to high, a bit, teen kind of margins. What about on the top line? From 25,000 crore, you've been growing at more than 20% for the last few years. Is that the historical growth?
Yeah, so our revenue is 6,400 crores.
Yes.
And we have, last year we grew around close to 25%. We believe we are operating out of a $120 billion TAM, which is very, very big. Very rare, opportunity for teams like us, management teams like us, to operate out of a $120 billion TAM, which is in India, which is $68 billion, UAE and KSA $11 billion, small one preschool is $8 billion, and our global B is around close to $35 billion. So we feel very excited. We're an insignificant player in that $120 billion TAM. Although we may be the largest in India, multi-channel, in the India mothers, baby and kids ecosystem, but we're still insignificant. So we have a huge headroom to grow for many years to come. So feel very excited, hopefully we'll continue.
So what's been the past 3 year historical top line growth rate?
We have been at a console level, we'll be at least 30% plus.
Is there any reason to believe why this will not continue, or it should continue?
Well, I can't speak about the future, but I'll say given our strengths, given our industry CAGR that is already high, we should be able to do justice to those numbers. And
the $120 billion TAM.
Yes.
Okay. So in this, since we're talking about the future, you have more than 1,000 stores right now. You're raising money, close to about 1,600 plus crore. Some of it will go in expanding your store count. How many stores are you looking to add on an annual basis to capture this TAM?
So if you look at our RHP, you will see we are adding around close to 350 COCO stores in next 3 years alone. We will continue to add more stores as we go along.
What will be the breakup between India and international?
International will be just 12 stores.
Just 12 stores.
Just 12 stores.
Okay. And for the benefit of our viewers, COCO stands for company owned, company operated, which is different from the asset light FOFO, as they call it, franchisee owned and franchisee operated. But
I must say that we have 680 stores which are franchisee owned and franchisee operated. They have been our great partners in our journey. So 68% of our stores are FOFO, asset light totally, no capex, no opex, that's how we have been operating since day one. And COCO has been a recent addition.
So your online mix was more than 80% last 2 years. This year I think it's come down to 76, 77%. How is the online-offline mix going to change when you increase your store count?
No, actually not. So I think maybe there's some confusion in the data that you have seen. If you look at our online-offline mix in India, for example, it has pretty much remained constant.
81.6% in FY22, it was 77.4% in FY23, and it's at 76.9%, so a slight decline.
Well, you are looking probably...
India operation.
Yeah, so should not look the data for the FY22 because there was a COVID year. COVID year had some, stores operations were during COVID were hampered. So if you look at from a steady state for last 2 years, it's around almost 76%.
76, 77.
We believe that our online story as well as our offline growth will compound at a natural curve in terms of both growing meaningfully, and therefore this ratio should not change much.
One of the levers is increasing the the revenue contribution of your own label, Baby Hug. What does it currently stand at? Do you have an aspiration to increase it in terms of the revenue contribution, and what can that number look?
We have 7,500 brand partners that we are working, and we have our own home brand portfolio as well. Our home brands is a meaningful share in our portfolio today.
How much? 50%? Is that a fair assessment?
I won't be able to share exact number, but it's a very meaningful number. Since our home brand share is meaningful, Baby Hug is a large part of our home brand, which is also our home brand. Usually you would expect that home brands, typically since you will do right from manufacturing to retailing, you will have a higher margins on the home brand compared to the third-party brands. So you'll continue to over-index on your margins as you grow along your home brand story.
Your market share is currently 2.5 to 3% in the India childcare products and 16 to 17% in the organized India childcare products. How has this market share changed, say, in the last 1 year or 2 years?
Look, it will keep changing as we grow along because one, We're in the large TAM, and all our
So has it
spends
gone
that
up, your market share?
it will gradually inch up, is all I can say. If because if you look at the industry will be also growing at a 20% CAGR. So we'll do better, hopefully, and therefore we will continue to improve. And as we have talked about, we are the largest shopping destination already. 1,000 stores will become, as we said, we'll be putting out 350 stores in the next 3 years in Coco alone. And with all of our the strengths of our Coco stores, four partners, our online base of millennial mothers, and our distribution channel, which also has recently started, where we're taking our home brand products to pharmacies and groceries where young parents can buy their products. Some of the products like a diaper or a lotion or an oil and so on and so forth from the pharmacies and groceries coming back to us, buying the larger range of baby hug products back onto our channel is like a closed ecosystem story that
But you're in that door only for 12 years, right? Because you are catering to products from the age group of 0 to 12. After the child turns 12, that mother is out of the door.
That's correct.
So is it tough for you to retain customers, and what is the strategy to acquire more customers?
So, great question, Reema. I think, look, first of all, we have operated, this TAM itself is so big, as I've been saying again and again, within the 0 to 12, right?
$68 billion
$68
in
billion
India,
by CY28. That itself is only between 0 to 12, right? And having said this, we are insignificant. We are like 2 to 3% share. So we have a huge headroom. Only 14% of the market, 16% of the market is organized. So there is also a huge headroom to the organized market to become bigger as the India will, prosper. Now,
But do you feel the competitive heat? Because when a child becomes 6, 7, he has the option of going to other stores, like say Agio or buying from Myntra, Zudio, for instance. So how is competitive intensity, and how has discounting changed for you in the last few years?
So look, if you look at a competitive intensity, we have played on our strengths for a very, very long period of time. All these players have been around for more than 10 years. Most of them have been around for more than 10 years, or at least 7, 8 years plus. And they're all having as much capital as you can imagine to deploy and to push and to do what they have to do. But we have been very laser focused in building solutions to bring joy to young mothers and young parents, because we are in the business of building trust with mothers. If we are able to deliver on building and compounding that trust with mothers, mothers will only be with us like you, who will shop with us, not just for as a multi-brand retail platform, being online or offline, but at the same time also come back for shopping some of the curated brands of 7,500 brands that we have, plus our home brands. That way, mothers will have two main reasons to come back to us for this curation, for this trust. Our supply chain is very unique. We are talking about 900 plus contract manufacturers that are making with us. Integrated, there are 82 warehouses. We deliver 47 cities, same day delivery, 1,000 plus cities next day delivery. This kind of a supply chain hardly exists in the country, and in the babies and kids market, you can imagine it's very rare to find.
You worked on a lot of adjacencies which have added value to FirstCry's growth, whether it's the international presence or incorporating global Bs or even expanding the age group for which you cater to right now. What are the moonshot ideas that you're working at?
Look,
it's not for the investors today,
sure, no,
but I want to know that in your dreaming big, what is it that we're looking at now?
So look, when you dream big, you have to also, make sure that you are laser focused on execution.
That's fine.
No, it's very important, Reema. So
this baby is going to grow up fine. Tell us what else you're working on.
So look, I think we will have opportunities as we go along. Although this $120 billion TAM is very massive for us, we will be growing our distribution channel, quite meaningfully as we go along. Because there are millions of retailers, pharmacies and grocery where we can have these products where young parents can buy from that demand. India has 3 demand pockets, right? Online, MBO, EBO, and third is retail, GT, right? We are very less present in GT because this journey has just started for us. So this is a very big growth area for us. Like we will add more stores, like we'll continue to add our online through investment in technology and brand. So for us right now, instead of taking more moonshots in other international markets or other areas, I think today, if you ask me honestly, we believe, and our management team is fairly excited to just remain focused on 3 things. We will continue to focus on India multi-channel, our international UAE and KSA, and our global Bs. These 3 itself will give us bountiful of opportunities that we really, want to like assimilate and create value, not just for, solutions for young parents and our customers, and also for our shareholders.
Was there ever a time when you thought that this is too tough and I'm going to quit now? Do you remember any such instance?
Well, it happened in my first venture, not in this one.
Not in this one.
Not in this one.
There was
Because
no
I faced
challenge big enough that you couldn't solve.
Yeah, I mean, because I think, look, when in the first venture, I saw .com burst in 2000. I saw 2007, the global financial crisis. And in this venture, I also saw a couple of, crises that we saw in 2013, 2016, some fundraising cycles that go up and down. But I think it made us strong in that first venture, so very, very strong. Funding cycles come and go. We have not raised primary for the last 5 years. This will be our first primary raise after many years. And
Are you a bit disappointed with the valuation at $2.8 billion? It's unchanged from the last round.
Look, valuations and all of these are a function. We met a lot of public market investors, domestic institutional investors, foreign institutional investors, quite a lot of them, and especially all from the public side. And we got their perspectives. Our banking partners, BRLMs, have collated all the data points from them.
Were you hoping for a push towards 3.5?
Well, it doesn't matter. We are here for long. It doesn't matter. We feel that price discovery was a proper process. It's a process that BRLMs conduct on the behalf of the board. And we met in the process some very exciting institutional, domestic and foreign investors, and we feel my eyes were also opened when we met so many of them, because typically we have met only private equity investors in our past. But this time around we met a lot of public market investors, domestic and foreign, learned their perspectives, learned their journeys as well, how institutions have been built, and it was very exciting. In our journey of many years, there's nothing to disappoint, and it's an exciting moment for all of us, and for all our stakeholders, shareholders, customers as well. I would say that they'll feel so proud to be associated with us, having trusted with us for buying products, relying on our content, community, India, international, and so on and so forth. We feel we'll continue to make them proud and make India proud as well.
Thank you, Supam. This has been a great conversation. Wish you all the best. It's a big milestone for you, your family, and the entire team at FirstCry. Thank you.
Thank you, Reema. Thank you very much.